What's going on, traders? It's Lucas here from the Commitment of Traders Club. Thank you so much for joining us today. I've got a fantastic beginner strategy here, which is a simple break and retest strategy so that anyone can pick it up easy and head into the markets and put this theory to the test. What we'll be looking is at a break of price structure, learn how to catch the market on the retest of a key level, and then continue to the downside, and where we would enter our trades on a beginner level. Now, without further ado, let's head over to the chart and get straight into the video. Okay, so over here on the chart we are on Aussie dollar, US dollar, and we are currently looking on the daily perspective. And what we want to do as beginner traders is first of all identify where the market is heading and what the market is currently doing. Now, what the market is currently doing on the daily is it has been in a very strong area of support and resistance, and the market's been moving sideways for a long period of time. It's found support at this level here and then strong resistance up at this level here. Now, what does that tell us? That tells us there's been lots of indecision in the market, and we do not want to enter into any trading probabilities where the market is moving sideways. It's not clear structure, and if we trade clear structure, it improves our win rate dramatically. That is what we want to do. But recently, the market has broken below some key levels of interest, and we'll be looking to catch this market on the retest of a key level. So first of all, as beginner traders, or even as competent traders, we want to know that we are on the right side of the market and not counter trend trading. So on the daily, we were on a nice uptrend. Some would say that this is a continuation of the uptrend, but as competent swing traders, we like to be on the side of the banks. How do we do that? We zoom out. On the weekly chart, we can clearly see that the market has been in a nice uptrend, but if we zoom it out further, we can see that the market has actually been in a very strong downtrend, and this is a simple pullback retracement leg of this previous impulse. The market has failed to make a higher high here, so we can actually consider the market to now continue in the direction of the overall trend, which is to the downside. That's our analysis. To make our analysis clearer, we want to see what the banks are doing before we even consider taking a trade. So what we do is we head over to the Commitment of Traders Club. If you're not a member, feel free to check out the website. I'll link it in the description for you. Head over there and we go on to the Commitment of Traders reports. We're obviously back testing currently, so we are looking at the 21st of June. We go on Australian dollar. Again, it's all traded spot against the USD, so we are trading Aussie dollar USD, and this is the Aussie dollar USD report. And 21st of July around here, we can see that the net positions of institutions are minus 17.5k to the short side. And they have been building this position up since the 25th of May, so over a few weeks they've been building up their short position. So we are definitely on the right side of the market with our analysis that is going to continue to the downside. Evidently here they have more short positions open than long positions, so perfect. That's our first confluence. We are in the market trend to the downside along with the big players and the banks. Fantastic. So back onto the daily where we spotted this potential opportunity. And as a beginner trader, what we want to do, for those of you who are new to the game, is you want to identify key levels of interest. Now, some YouTubers out there and some traders will draw hundreds of lines on the chart to show lots of different levels. That's very good for them. But what I like to do is I like to keep the chart nice and clean. It doesn't cloud your judgment. So straight off the bat, what we can see here is a very strong area of interest. Why is it a strong area of interest? We've had huge price and wick rejection at this area once, twice, and 3 times here where it was resistance, and then twice as support. Now, what we want to do, we know the market is continuing to the downside. What we'll do, we know the market is continuing to the downside, so we want to see price break through this level to find confidence in our analysis that it is actually continuing down and not going to be a third retest at this level. Now, what the banks and institutions will know is that retail traders who don't utilize the information that we publish on our website is they will think, great, this is a third retest of the area, and then the market will push again once more to the upside. And in doing so, retail traders, let's just go to this, retail traders will have a buy order right here. It's looking probably something like this. Target up there, I think, oh wow, 1 to 5, that's fantastic. But what we'll see is we know that the market is in a sell position based on the big movers and institutions, that they're just going to get stopped out, and that increases the liquidity of them to continue to the downside. So our analysis is short. Okay, so on the 4 hour we can zoom in now to pick our perfect entries. And what we can see after this huge impulse to the downside, which we saw on the daily chart, is this particular area of interest here, which caused price to react quite violently. It is a whole number at 176,500 roughly. The market found support here quite violently, and now hopefully we'll find resistance and we can enter a trade, because we know that the market likes to find resistance at the previous support levels. Now the market has caused a huge 4 hour impulse leg to the downside, which has broken through our previous area of support. So what we might do as competent traders is we want to see if we can grab a trade on the retest. So we might have a pending order, as long as we monitor it carefully, for around about this level. If we keep our stop loss nice and loose in this instance, as we are trading on the 4 hour, we're not risking too much, and we can even get our nice 1 to 3, which is part of our trading plan to trade from. Now there may even be more opportunities for us to enter, but this seems like a reasonable time to enter into a retest trade based on the power of this key level. Now new traders, what makes a level key is remember that price reacts very violently to it. It found huge wick rejections here and then a massive impulse to the upside. It's all about the demand area. To gain confidence in this, we want to also use our Fibonacci from the leg to where we are down there. And what we can see is this is actually the 0.382 area, so another respected fib level, which we can see if the market reacts to. So we've got our pending order placed there with the confluence of our fib, and let's see how the market plays out. Okay, so that tapped us in. It did react nicely to this area. Confluence on our favour that the wick rejection shows immense rejection and price rejection from this area. So we are well and truly in this trade. And there you have it, guys. A fantastic, simple break and retest of this area, which has now continued to the downside and profited us a nice 100 pips to the downside, nice and easy over a day or so. But this isn't the only opportunity we can take from this trade. We've now broken below our previous level of interest, which is this key level. Now price reacted very violently to it also. It had multiple rejection zones, one here, and two arguably here, before continuing to the upside. Now we know we're trading to the downside, so we will want to see the market come back for the retest, which it has started to do with this wick rejection candle here, and the pattern it has printed here being almost the sledgehammer to the downside. So we've now broken below this previous level of structure, which was support, and now we can expect it to turn resistance. But the level is not quite as clean as it was in our previous trade which we took, which turned into a nice 100 pip profit. So what we want to do is we want to put a pending order in place to ensure we have a nice wide stop loss, that it doesn't cut us out too early, because we know the trade is going to the downside based on what the institutions are doing. So what we do is we'll get a trade going, and we'll put a pending order. And finally, the area, there's been a few price action reactions here, and again here on the small support. So we'll put a nice pending order there. We'll put our stop loss around the area where we entered the first trade. Have we got plenty of room to go for a 1 to 3? I think so, because we want the price to break below here. 1 to 3, perfect. Beginners, we do not want to risk more than 1 to 4% of our account. You can enter a trade on 100% of your account, but trust me, you lose a few trades, you'll blow your account very quickly. Risk 4%, you're going to make 3 times your risk if this trade goes well, which I'm sure it will, and then everyone's happy. Okay, so without further ado, let's wait patiently and see how the market plays out. Okay, so we're definitely in the trade there. And there we have it. Another 1 to 3 trade. How many pips did we profit on this one? 160 pips. That is a fantastic trading opportunity there on this simple break and retest. And for summary, let's just go over how we achieved that. So looking back, we found a nice interesting level here. The market reacted very violently to it. We waited for price to break down. We knew the market was trading to the downside based on what the banks and institutions were doing, because we analysed the data on the Commitment of Traders Club. Waited for that nice retest, played it slightly aggressive there, but we allowed for a stop loss which is just right, I like to call it. Not too tight that we get stopped out immediately, but not too long, so if we are wrong, we haven't got to sit there and suffer. Perfect entry, price pushed down, there was our 1 to 3 straight off the bat. Then we knew as price broke below the second area of interest, which was previous support, that it would then turn to resistance. So we put a pending order around about the previous support line there, and also from looking left. Again, waited patiently, the market tapped us in, and then we just sit back and let the market do its thing to eventually tap us out over a few days. A few points to take away here, traders, is take control of your emotions. It would have been very easy to close the trade out when you were down here. When you start seeing that the market is moving against you, to quickly grab your cash and get out of there quickly. That's the wrong thing to do. What I like to do is you've accepted the stop loss and you've accepted your profit. Just sit and let the trade do its thing. The market moves in waves, and if you are strong with your analysis and you support what you say, then there's no reason to worry. Just sit back, put a notification on for when the trade either stops you out or takes you out with your profits. Traders, if you want to know how to analyse the data that the banks publish every week, please do head over to the Commitment of Traders Club. Join the club. It does not cost you much at all. Most trading clubs you'll pay in excess of £500 for. With ours, it's a monthly basis. Cancel anytime. Traders, I hope you enjoyed and learned something new on a simple break and retest strategy today. If you've got any questions, please feel free to drop me a message. In the meantime, happy trading. Take care.